Welcome back to the deep dive. Okay, let's paint a picture. Imagine you're bullish on Bitcoin, really believe in its future, but maybe you prefer sticking to the stock market. You like equities.
Right. You want that exposure, but through familiar channels.
Exactly. So you find two tickers. They seem closely linked to Bitcoin's ups and downs. MicroStrategy, MSTR, and this other thing, the T-Rex 2X long MSTR ETF, MSTU.
And they are linked. I mean, super tightly linked day to day. Our data shows a correlation of 1.00, basically perfect. When MSTR zigs, MSTU zigs. When MSTR zags, MSTU zags. Every day.
Okay, so that perfect correlation, it sets up an expectation, doesn't it? You
Yeah.
figure, all right, if MSTR has a rough patch, say it's down 12% over the year.
You'd naturally think, okay, the 2x version, maybe it's down twice that, like 24%. Still hurts, but it makes sense mathematically.
That's the logical leap. But here's the kicker. Looking at the numbers right up to November 6, 2025, MSTR is indeed down about 12% year to date.
And MSTU, that 2x leveraged ETF, over
Yeah.
the very same period, despite moving in the same direction every day, it's down a shocking 65%. 65%.
Wow. Let that sink in. If you put, say, 10 grand into each at the start of 2025, your MSTR position is maybe $8,800.
In the MSTU position, it's been gutted, down to just $3,500.
That massive gap, that catastrophic difference despite the perfect daily correlation. Well, that's the puzzle we're digging into today.
Yeah, what's going on there?
This is everything you need to know about finance. We're going deep on MicroStrategy's bold Bitcoin strategy. Then we'll decode the tricky mechanics behind MSTU. And we'll show you exactly why that leverage, held over time, can lead to such drastically different outcomes.
And just a quick heads up, as always, this deep dive is for information and education. It's definitely not financial advice. We're just exploring the data here.
Absolutely. And hey, if you find this kind of analysis useful, digging into the why behind the numbers, please do like and subscribe. It helps us keep doing this.
Our goal today is really to unpack this MSTR and MSTU situation using the latest data so you can understand the risks and maybe figure out the right questions to ask yourself before even considering these kinds of instruments.
Okay, let's lay the groundwork. MicroStrategy Incorporated, ticker MSTR. Trading around $255 right now. And technically, it's still an American software company, right? Enterprise analytics, mobile stuff.
Technically, yes, it does have a software business. But let's be honest, for almost everyone watching this stock, that's almost become a sideshow.
A sideshow. How so?
Because their main identity now in the market size is this massive bet on Bitcoin. They started using Bitcoin as their primary treasury reserve asset, and they haven't just dipped a toe in, they've gone all in.
So investors are treating it less like a software company and more like a Bitcoin holding company you can buy on the stock exchange.
Pretty much. Its stock price is heavily influenced by Bitcoin's price swings. Often amplified, actually. It's become this sort of corporate vehicle for a big leveraged bet on Bitcoin's future.
Leveraged. That's the key word starting to emerge here, isn't it? How are they leveraging?
Well, they raise money. They issue debt or preferred stock, like they raised around $2.8 billion that way, and then they turn around and use that cash to buy more Bitcoin.
So they're using the company's structure, its ability to raise capital, to acquire more Bitcoin than they could with just their operating cash flow.
Exactly. It's a high conviction strategy. They really believe Bitcoin is going way up.
Okay, high conviction, high potential reward if they're right. But what are the specific risks with this model, with MSTR itself, beyond just Bitcoin's price falling?
There are a few layers. First, the bear argument is that the core software business isn't that strong, or at least it's completely overshadowed. So if Bitcoin goes sideways or down, the company's value is tied almost entirely to that speculative asset. Second, there's dilution risk. When they issue new stock or preferred shares to buy Bitcoin, it potentially reduces the value slice for existing common shareholders. Unless Bitcoin rises enough to offset that dilution, you could end up worse off.
The MSTR, even before we get to the ETF, is already a pretty aggressive, volatile play. It's Bitcoin exposure, but with added corporate and leverage risks.
Absolutely. It's already dialed up the risk compared to just holding Bitcoin directly.
All right, so that's MSTR, our volatile base layer. Now let's talk about MSTU, the T-Rex 2X long MSTR daily target ETF. How does this thing manage to amplify MSTR's risk so dramatically, leading to that, 65% loss versus 12%?
Okay, MSTU. It's an ETF from Tuttle Capital Management. Its stated goal is pretty simple on the surface: deliver 2 times the daily performance of MSTR, before fees, of course.
2 times daily. So if MSTR jumps 1% today, MSTU aims for a 2% jump.
That's the idea. And if MSTR drops 1% tomorrow, MSTU should drop 2%. Sounds straightforward, maybe even attractive if you're really bullish short term.
But there's a huge catch, right? That word daily.
That's the absolute core issue. The daily rebalancing. This is the mechanism that trips up so many people who try to hold these things longer than, well, very short time.
Explain that daily rebalancing. Why does it mean you can't just buy MSTU, hold it for a year, and expect roughly double MSTR's annual return? Why the huge divergence we saw?
It's because of compounding math and something often called leverage decay or beta slippage. These ETFs use derivatives like swaps to hit that 2x target, but crucially, they reset that leverage every single day back to 2x based on the closing price.
Okay, reset every day, so your exposure isn't 2x the long-term move, it's only 2x the move from yesterday's close to today's close.
Precisely. And that daily reset, especially in volatile markets, is where the problem starts. Let's use a quick example.
Yeah, please do. I think visualizing it helps.
Okay, imagine MSTR starts at $100. Day one, it has a great day, goes up 10% to $110.
Right, so MSTU, the 2x ETF, should go up 20%. From $100 to $120.
Perfect. Everyone's happy. But day two, MSTR gives back those gains. It drops 9.09%. That math gets it right back to the starting $100. So MSTR is flat over 2 days.
Okay, MSTR is flat, but MSTU started day two at $120. What happens to it?
Well, MSTR dropped 9.09%. MSTU has to drop twice that percentage, so it drops 18.18%.
And that 18.18% drop comes off the $120 starting point for day two.
Exactly. So 18.18% of $120 is about $21.82. You subtract that from $120, and MSTU ends day two at roughly $98.18.
Wow. Okay, so MSTR is perfectly flat over 2 days, back to $100. But MSTU, the 2x version, is already down almost 2%.
That's leverage decay in action. The volatility, the up and down, combined with the daily reset, caused it to lose value even when the underlying asset went nowhere overall. Sideways or choppy markets can just chew these things up.
So MSTU isn't just amplifying MSTR's risk, it's adding a whole new layer of structural risk on top.
Absolutely. It's why these are generally seen as tools for very short-term tactical trading. Think hours, maybe days. They're trying to catch a specific sharp move. They are really not designed as buy and hold investments for most people.
And given the kind of volatility we see in MSTR itself, which is tied to Bitcoin, that volatility must be like pouring gasoline on the fire for MSTU's decay.
You got it. Remember MSTR's history? It's wild. We saw huge gains, like over 300% in 2024 and 2023. But then there was that massive crash, down like 75% in 2022.
A whiplash.
That kind of extreme up and down is exactly the environment where daily leveraged products tend to underperform dramatically over time due to that decay effect.
Which brings us back full circle to the 2025 numbers. MSTR down 12%. Nearly 15% adjusted for inflation.
While MSTU, the 2x daily leveraged play on that same volatile asset, is down 65%, or over 66% inflation adjusted. It's a brutal illustration of the concept.
That single comparison, MSTR negative 12%, MSTU negative 65% over the same period, should probably be framed and put on the wall for anyone thinking about using these daily leverage ETFs for anything longer than a quick trade.
It really highlights the risk, and we can see it in the standard risk metrics too. Look at daily standard deviation, basically, a measure of how much the price swings day to day. MSTR is already incredibly volatile. Its daily standard deviation is around 88%.
88%? That's huge volatility for a stock. What's MSTU's?
MSTU's daily standard deviation. It's a staggering 173%.
Whoa, nearly double the volatility of an already super volatile stock. What does that even feel like for someone holding it?
It feels like getting whipsawed constantly. Your capital is subject to these massive daily fluctuations, which just feeds that decay mechanism we talked about. And the consequences show up starkly in the drawdowns.
Right. The drawdown, the loss from the most recent peak.
Yeah.
MSTR's current drawdown is painful enough, down about 46% from its high.
Painful, yes. But MSTU's current drawdown, as of early November 2025, it's sitting at minus 89.6%, nearly 90% down from its peak.
89%. That's practically wiping out capital. It really drives home the point that MSTU isn't just a higher risk investment, it's a fundamentally different beast. A trading instrument with a built-in failure mode if you hold it wrong.
Exactly. It behaves completely differently over time.
Okay, so let's try and synthesize this for you, the listener. What are the key takeaways here? On one hand, you have MSTR.
Right. MSTR is your high-risk, potentially high-reward investment based on a long-term leveraged bet on Bitcoin. You need a strong stomach for volatility, and you need to understand the corporate risks like dilution.
And on the other hand, you have MSTU.
MSTU is fundamentally a short-term trading tool. It's built to magnify daily moves, but that same structure makes it prone to significant decay over weeks or months, especially in volatile
We
markets.
can even see this difference in risk-adjusted returns, right? Like the Sharpe ratio.
Yeah, exactly. The Sharpe ratio measures return relative to risk taken. MSTR's Sharpe ratio for the period is low, around 0.13, but it's positive. It delivered some return for the risk.
Okay, positive if barely. What about MSTU, which lost 65% while taking on almost double the volatility?
MSTU's Sharpe ratio is narrow 0.35, negative. That tells you it failed miserably on a risk-adjusted basis. You took on extreme risk and were rewarded with significant losses.
So this whole comparison really forces you to confront some critical questions if you're even thinking about touching either of these.
Absolutely. First and foremost, what is your realistic time horizon? Are you talking days or weeks, or are you thinking months or years? The answer dramatically changes which, if any, might be appropriate. And for MSTU, the data strongly suggests months or years is the wrong answer.
Second key question.
Do you truly grasp the mechanics of daily rebalancing and leverage decay? Do you understand how MSTU can lose value even if MSTR ends up flat or slightly up over a period just because of the choppiness?
And maybe a third. How confident are you in your short-term market timing? Because MSTU seems to demand precision timing to avoid that decay.
That's right. It's a tool that requires skill and active management.
So for many people listening, especially if you're not a specialist in crypto volatility or complex derivatives, the takeaway might be simpler.
It might be. If you want Bitcoin exposure, maybe owning Bitcoin directly or perhaps through a standard unleveraged Bitcoin ETF if available is a much simpler, potentially less destructive path. MSTR and especially MSTU are really speculative instruments, not core holdings for most.
Let's quickly recap then. MSTR, a software company that's effectively become a leveraged corporate play on Bitcoin. High volatility, potential long-term reward, but with corporate risks.
And MSTU, an ultra-volatile 2x daily leveraged ETF on MSTR, designed for very short-term trades, structurally prone to decay, and as shown in 2025, capable of dramatically underperforming the underlying asset over medium timeframes.
Okay, so given everything we've discussed, the extreme volatility of crypto assets like Bitcoin feeding into MSTR, and then the structural decay and near 90% drawdowns seen in leveraged products like MSTU, here's a final thought to chew on.
All right.
What does this data suggest about the long-term viability or stability of these highly leveraged daily reset ETFs, especially in a market as wild as crypto? Will traders keep using them despite these risks, or could we see more scrutiny, maybe even restrictions, down the road as the market matures?
That's a really interesting question about market structure and potentially regulation in the future. Definitely something to keep an eye on.
Well, thanks for breaking down that complexity with us today. It's a fascinating case study in correlation versus actual performance.
Glad to be here. It really shows why understanding the plumbing matters.
Indeed. We hope this was helpful. We encourage you to explore related topics and maybe try out our latest episodes. Thanks for tuning in to The Deep Dive.